All right, so here we are, end of yet another week. This is Saturday, 22nd of June. We are in our usual masterclass weekend session. We'll quickly take a look at the sectors first, get a view. Is there any requirement to change our strategies or not? How are the sectors piling up? I have not looked into or not actually opened the RRG graphs of late, so I'll just squeeze in some time so that we can take a look at the RRG flow. So quickly, after all that election result drama, the markets are kind of coming out of it. This is crazy. Jitesh, please do not annotate on the screen. I can make a decent assumption that you are an adult, so please don't annotate like a child on the screen. Let me clear all drawings. All right, good start. So I was saying that the index has left, is trying to leave behind the election result drama behind, and it's holding well to its all-time highs. If we take a look at the daily charts, pure price behavior, this is a sign of consolidation. In Heiken-Ashi language, this is clearly a sign of consolidation. Weekly is holding really well to, after all this slowdown, it's actually holding really well after the breakout. So weekly price with indicator cut indicators does not give us any negative cues at all. Daily gives us a sign of slowdown. And if we drop down another time frame, let's say 125 or 75, yes, there is a bit of a confirmed sign of momentum slowdown. Yes, the price is cooling off a little bit in terms of Heiken-Ashi, but it's too early. We had a breakout to an all-time high, especially after a 700-point rally and a 1,000-point sell-off and a bounce back and all that drama. So even if the index comes down close to that 23,300 roundabout there, structurally, in terms of the look and feel of the chart, we can still continue to say that the bull market is intact. The bullishness is intact. It needs to fall a certain degree more for the body to, come back to the market. So Nifty looks fine from a short-term point of view. We may see a bit of a slowdown. We are at 23,450. Give and take another 200 points on the Nifty is not much. So keep a cautiously bullish approach. The mid small caps and the CNX 500, this is where it gets a little interesting. Number one, the mid cap weekly chart is no problem, just like the Nifty. Daily chart, maybe a chance of a divergence playing out sometime next week. On the other hand, the 125-minute time frame, the smaller time frames, is confirming some decent looking slant and structural divergences. If I change this mid cap chart from Heiken to, let's say, the bar chart, then the first and foremost thing that we would like to see is a slip below Friday's low, a close below Friday's low. Then the chances of a short-term correction increases. So mid cap is giving signs of that possibility. Not confirmed, but looking at it, the possibility is high. If we come to the small cap, it's also very, very similar. Very, very good looking weekly charts. Slowdown in the daily and confirmations of some divergences on the 125. So a bit of a slowdown or a bit of a short-term correction should not be discounted. Now, whether it will be a sharp correction, because small caps, mid caps, especially small caps, in the last few months have, whenever it had come off, the come off had been particularly sharp. I'm discounting this election result. This is one-off, but particularly it has been sharp. So small cap, mid cap, yes. 500 would be a more settled down chart. Weekly is fine. Daily is very, very similar to Nifty. Overall view also is cautiously bullish. So mid and small caps. All right. Let's come and take a look at the sectors. Before I take a look at the sectors, let me drag the stockcharts.com RRG graph page from the other screen. I can open the RRG graphs. I need to make the benchmark CNX 500 and update it. There you go. This is a 10-week performance. Let me first start with a 1 week and then we'll go to maybe a quarterly view. Now, percentage gains loss wise, it seems like a decently divided market that we had. And it's been mixed across the tails also. It's a very, very colorful gainers and colorful losers in terms of the quadrant. Bank Nifty, CNX Finance were the leaders. We saw a phenomenal move coming in from the Bank Nifty. It's in the improving quadrant. We'll come to that graph little later. But let's quickly go to the Bank Nifty and Finance chart and just take a look at it from the chart's point of view. RRJ graph is telling us it's pretty good. Or it was the biggest gainer. We'll take a look at the flow of the RRJ graph. Now, Bank Nifty weekly chart, no problem. Bank Nifty daily chart, the trend is your friend, no problem. And even if we go down one time frame lower, actually no problem. The Bank Nifty does not give us any clues of momentum slowdown, Heikin-Ashi slowdown, divergences, or nothing that sort. Okay. Unless we get any evidences on the charts, we cannot just cook it up back of our mind that, oh, it has gone up, so it should come down. That's a very amateurish way of looking at it. So Finance and Bank Nifty, no problem whatsoever. In fact, I'll quickly take this opportunity and drag it to around 12 weeks and fit it and quickly take a look at both Bank Nifty and Finance. So this is Bank Nifty. In the improving quadrant, it's gaining momentum. Now it should ideally gain some relative strength. Finance, on the other hand, is very, very similar looking. I like this quadrant. Improving quadrant generally leads to leading quadrant. And when you have the market's biggest pocket in terms of weightage, the financials in the improving quadrant, it definitely gives you a supporting evidence that, okay, the market is not that weak. The other which is there in the improving quadrant they are the FMCG and the media. I've rarely seen a move like this, especially in terms of the momentum. CNX media has just vertically gone up from lagging to improving. I'm not a big fan of tracking the media or trading any of these stocks, but FMCG is something that I'm interested in. The quadrant is improving. The behavior in terms of both the axis is positive. It was gaining vertically, now it's gaining horizontally, which means that the momentum of relative strength and relative strength per se, both of them are improving. It's a good reading from RRG, FMCG. If that's the case, can we take a look at FMCG here and try and evaluate how it looks? It looks good. In fact, the CNX FMCG weekly chart has just consolidated after the recent 2-week rally. This consolidation has taken a shape of a multi-day correction. The multi-day correction is knocking at previous highs. Structurally, previous highs should act as support. And so it's a strong structure and we ideally should see a turnaround. Is there any sign of turnaround? Is it giving us any signs that yes, I am turning around? Well, not from 125 and not from the daily yet. I'm quite sure if the RRG graphs and the price behavior kinds of sinks in well, this resistance, erstwhile resistance, should act as current support and we should get some kind of a turnaround. Once we get this sign, keep an eye on ITC, keep an eye on Hindustan Unilever, of course, the two major stocks in this pocket. But from a slightly larger time frame, this short-term move is okay. But from a slightly larger point of view, if we get a move above last week's high, we are headed for a new lifetime high. It's very, very clear. So FMCG, definitely keep it in your watch list. These are the improving in the improving quadrant. The weakening is only one, which is the oil and gas or the energy. It's a classic RRG behavior wherein you lose momentum of relative strength. Now you're actually losing relative strength. So relatively, they are not performing. They may be going up. But relative to the overall markets, they are underperforming. Is that the case? So let's take a look at the oil and gas, or what I have here is CNX Energy. If I'm not mistaken, CNX Energy last week when we discussed in our last weekly session, I think we discussed that this pocket can come off a little bit. Let's take a look. Momentum has been slowing down for quite some time. It's a slant. Price wise, not really. Price does not confirm the momentum slowdown. Daily chart, so weekly chart we will say cautiously bullish because the trend is still positive. Daily chart has given us a nice quick little divergence, and it's cooling off a little bit. If I zoom into the Heikin-Ashi behavior, I have a good looking negative Heikin-Ashi on Thursday and kind of an inside body on Friday. The entire range also was within. Our indicators are marking it, which means that if Thursday's low gets compromised, we may see a little bit of a further downside. There are evidences of this prospective downside. 125 of course has already cooled off in terms of direction and momentum. So CNX Energy, the chart is kind of resonating with this weakening behavior. So CNX Energy or oil and gas, keep an eye on the individual stocks where you can get a pocket of weakness. Before I go to the leading quadrants, there's quite a bit of them in the leading quadrant. The one which is still lagging is IT and healthcare. Now out of this, it's IT, which is the second most heaviest sector in terms of weightage, is gaining vertically, which is essentially means the momentum of the relative strength is gaining. So there might be some bounce backs or possibility of bounce back. Let's see. If we come to the CNX IT sectoral view, we will see improvement in the weekly chart, momentum also kind of improving. The daily chart has recently given us a breakout, if you remember just yesterday's trade. And we had taken Infosys, we had kind of identified Infi in this area, and we did take that trade. It's picking up, it's slowing down a little bit. Overall, it's fine, not a problem. We've got a large expansion in terms of bars. We've got a breakout. We've got a gap up. The slowdown is apparent if we take a look at this area. So there will be a little bit of choppiness and volatility. We did see these stocks hitting highs and then also hitting lowest point of the day in yesterday's trade. It's not going to be easy because it's trying to give a bounce back. It is retracing this entire fall. So it's not a table thumping bullish chart. It is a bullish chart, but it needs corrections. It needs further retests. We'll keep a bullish view on this. There are no particular signs of bearishness per se on either of these charts. So there's no reason to go bearish. Keep a bullish view. We have identified Infosys. The trade has been giving us decent returns. We have trailed the stop loss aggressively. So we stay bullish and we expect that this momentum to continue. Healthcare. Healthcare gave a breakout. I'll come to the chart a little later. The RRG graph has classical movement from leading to weakening to lagging. Please understand this, all this dots, this behavior of the RRG graphs, we are looking at from a 12 weeks perspective, which is around a quarter. This is weekly. Okay. This is weekly. So we're looking at 12 weeks. The way an RRG graph behaves, if I extend it, if I make it max 30 weeks, and if I kind of animate it for you, then you will be able to see how these graphs move. They move clockwise, not uniform clockwise. They will kind of go up and down within the leading and weakening, but eventually clockwise. That's the behavior. At the current juncture, from a 12-week point of view, at the current juncture, it's now moved to lagging. If you take a look at the healthcare chart, you would see a breakout that the index had given us recently. CNX Pharma had given us this breakout. It was a pretty structural, clean breakout, no problem. It's giving us a throwback. There was a bit of a tad little divergence playing out top over there. 125 minute is slowing down. It's apparently a bullish chart, which is throwing back for a retest. But because all this while it was going nowhere, the relative strength has gone away. Okay, one. Two is if I change the weekly chart to bar chart, I will notice that this is my breakout. The election behavior drama was the breakout week. Kind of a sustained move and completely given back. Now this is not classic breakout failure characteristic. No. But there is a tad bit of concern. Will this breakout fail? Will it slip back and pull back and open up on the downside? Will that happen? So need to keep an eye on that. RRG graph is telling us it's a relative underperformer. So do not go overly bullish in this pocket. I think we have to play depending on the price behavior. If we get short trades, so be it. If we get long trades, convincing long trades, so be it. So not a very strong view, but predominantly I would say 60-40. 60 on the downside, 40 on the upside because of the relative strength being weak. Now that leaves us to the greens, which is essentially the tail which is there in the leading quadrant. Remember, in leading quadrant, what we like to see is a line. This is like the worm. The worm should be going up and rising like this. This is an ideal reading, that it's gaining horizontally as well as vertically. The sign of first concern that it's slowing down is when it comes down vertically. Then it loses horizontally, right? In that regard, the first one that we can look at is auto. So auto, interesting, and auto charts will also be super strong. One of the strongest sectoral charts that you will find right now. Exceptional rally on the weekly time frame. No particular sign of slowdown or weakness at this juncture. The last time it was offering some slowdowns was in these areas, but that's past. Daily chart seems okay, not a problem. A bit of a divergence in the past, but nothing much. So auto stays bullish, no problem. There's no particular reason for you to look for shorting autos right now. Metal, if you can see CNX metal is losing vertically, means the relative strength of the momentum of the relative strength, beg your pardon, is cooling off, and very, very early sign that it may not go up as much as it was going up before. Okay, let's take a look at the chart. Now it has gone up, it has made a higher high. It's the momentum readings are kind of okay. It's a chart which has not managed to go back to its all-time high like the Nifty has managed to. There is a possibility of mild possibility of divergences kicking in the daily as well as the weekly. Not confirmed. Let's not jump the gun and go bearish. It may turn out to be bearish. We'll get better clarity next Saturday. Realty, crazy move. Realty, if you see the RRG graph, from being in the weakening and going towards lagging, it decides no, I'm going up, and it just shot up and goes to leading quadrant. This is a classic example from the RRG graphs, which makes me tell you that everything in the market is a function of price behavior, volumes, open interest, price behavior indicators, RRG graph, whatever is a derivative of price is ultimate. So you will see that behavior in reality also. This is the area, this was the area which led to the relative underperformance. Price, nothing at all. Weekly chart, pretty strong. Any sign of particular slowdown that we should be concerned about? Not really. Daily chart looks clean, a bit of slowdown of the Heiken Ashis, which tells us that the sector can slow down. Momentum weakening on the 125-minute time frame. Look at this rise and this fall. So this guy can come off a little bit. Whether it will be a little bit or more than a little bit, that I don't know. But it may come off, but too early to say. Strong sector. Small cap we have taken a look at. Mid cap we have taken a look at. So it leaves me the last one, consumer durables, which is struggling in this area, but still in the leading quadrant. Finally, consumer durables. Now remember, FMCG, we are strongly bullish. We expect the supports to kick in and we should get the bounce back. Brilliant looking weekly chart, stay bullish. Decent looking daily chart, no particular reason, a bit of slowdown, stay bullish, no divergences. A bit of slowdown over here, just like this. So we can get a short-term correction, nothing to be really concerned about. So which brings me to the end of the sectoral analysis. The takeaway is Nifty is holding fine to its all-time breakout. There have been a little bit of a sign of a momentum slowdown. No significant divergences. It should stay bullish. If you trade, if you take the downsides, if you try to short the market, close your position quickly. This is not a market where you would like to ride your shorts. This is not a weak market. Number one. Weakness can come from mid and small caps more if the market comes down. Let's say even the Nifty comes down by 200 or 300 points. Then we will very likely see more weakness coming in from the mid and small cap. The weakness can come from CNX Energy. The weakness can come from pharma and metal. We don't have confirmation in pharma and metal. We have confirmation in energy, which means your Reliance and OMCs and ONGC, and add the power stocks to that also. Banks financials looks clean unless they just reverse vertically down. Structurally, price wise, they looks clean. FMCG consumer durables are fine. FMCG can bottom out. Energy can top out. Don't play around with auto right now. Don't play around with finance or bank nifty right now. Pharma can lead to a breakout failure, and realty and metals can give us a short-term correction. That's more or less where we are, which gives us a feeling that stay with the price, go with the setup and the structure, and do your best, leave it to the market. Hopefully it will not be a crazy volatile move next week, and it will give us some chance to get some good returns towards the last week of the month. All right. So that's the weekly analysis. Now the next thing that we are going to do is update our sheet, and then I'll take a look at all your questions. Right.